put the spotlight on the earnings of Suraj Estates. As promised, Mr. Rahul Thomas, the whole-time director, is with us to talk to us about just that. Hi, good afternoon. Good to be speaking with you, Rahul. Just wanted to begin by asking you, how's the overall environment with respect to the demand and sales right now? What kind of pre-sales figure you have seen in the last few, weeks? And how's the overall momentum?
Hi, thanks for having me. Regarding our performance, our Q1 performance is a testament to our commitment to attract buyers at various price points across our value, luxury, and luxury portfolio. If you happen to see, our realizations have increased 13% year on year from 45,000 to 51,000, which clearly indicates that the premium are customers willing to pay for the Suraj brand, backed by the buoyancy, of course, in the real estate market. We have seen the numbers in pre-sales increase, whether it is the luxury portfolio or our value luxury portfolio, both have been doing well. Our bottom line, our PAT numbers also have increased by 107% year on year. And I think which is obviously due to the healthy growth of our pre-sales and also because of the deleveraging of our balance sheet and the reduction in the interest costs.
Sure. Rahul, this is Vinny joining in the conversation as well. While you surely are mentioning that, you're seeing the demand and good traction coming in from the luxury side, could you just talk to us about the sales volume this time? Because when you're seeing a slight bit of a dip of 7% on a year-on-year basis, I just want to understand, is this just a seasonality play? Or, now do you think the demand that we're seeing for the real estate, maybe that's at its peak and maybe some bit of a slowdown is something one could watch out for?
Sure. So as I mentioned earlier, I think realizations also have gone up. So volume has come down a bit, but the realizations have increased from 45,000 to 51,000. So that's a 13% year-on-year increase. So I think that also is critical. Of course, we've seen a buoyancy in the market, and of course, since the projects are in advanced levels, it's always better to improve our bottom line and improve the realizations of each project. So even though there's an overall dip from last year, we see the realizations have gone up to kind of commensurate that.
The overall realization has gone up, in terms of the product mix as well. But just wanted to get a sense from you with respect to the launch pipeline, which is lined up. Could you talk to us about what would be the gross development value of what comes in the next 12 to 18 months? How much square footage? Have you identified any redevelopment projects or land parcels, etc.?
Sure. In terms of a launch pipeline, we have 1,150 crores of launches planned for this year, for this financial year, out of which we have in advanced stages for two projects. One, a commercial development on Senapati Bapat Marg, which has a top line of 475 crores, and also one at Shivaji Park. So I think the team and us are very excited for these new launches coming up. So if I have to give you a mix between residential and commercial, the launch pipeline would be roughly between 475 crores for the commercial and 675 crores for the residential for this year.
Just wanted to get a sense, this Shivaji Park property that you're talking about, is it same as the other side, Kirti Society? Because I understand there's some litigation which is blocking the development on that one.
So yes, it is the same project. We have already filed the consent term with the society. So one of the litigations have been closed, and we are excited. It has a 350 crore top line, and I think that's what we're excited for the next quarter.
On that note, we let you go. Thanks so much for making time and speaking with us. So that's the management talking about the launch pipeline being quite strong. It's a realization which is improved for them, even though the volumes are a bit soft. But clearly going forward, they're expecting better things for the company.
If you like this video, then like, share and subscribe to ET Now.